What are you expecting from the markets today? And all these different data points, do they influence how you're balancing portfolios?
Yeah, well, Frank, look, entering 2023, we'd be saying, let's hope for some new beginnings, but it really seems like more of the same. And that means that we have a strong and tight labor market. We saw it with the ADP numbers yesterday. I think today, unemployment expected to remain unchanged, seeing, non-farm payrolls around 200,000, just means the Fed is going to be higher for longer. And I think that, the Fed has been very firm and very consistent in their message. And I think that's going to continue certainly through the first half of this year.
All right, so one of the big stories of 2022 was the rising dollar. In Q4, it fizzled a bit. Are we looking at all at a potential another rally for the dollar that really impacted a lot of tech companies and also multinationals?
Yeah, no, look, that it's very important when I head into 2023, I think investors are looking at three questions. What's going to happen to the US dollar, what's going to happen with interest rates, and what's going to happen with the cost of energy. And all those questions are sort of intertwined. I mean, the US dollar peaked out. I think that, because the Fed's response and the tight policy, they're not sort of alone in tightening. So the fact that other central banks are following suit, I think, is important. That's why I think the dollar has peaked. In terms of interest rates, the only way rates can come down is if inflation craters. And I certainly don't see that happening. Inflation is much too sticky because, again, of the strong labor market. And finally, the cost of energy demand, I expect to be very, very strong as China reopens. The traffic jams are beginning again in the big cities in China. You're going to begin to see, Chinese tourists in Europe. So frankly, I think the fact that China sort of quote reopens as they battle through COVID, I think is going to be very important. I think that's going to be inflationary
Okay.
in the sense when we look at energy prices.
All right, speaking of energy, how much are you investing in energy for portfolios? And I believe you also have a stock picker for us in the energy
That's
sector.
right. Yep. Yeah. So I'll get right to it. When we look at positioning coming into the year, obviously having some short-term liquidity is important. I really like precious metals. I've talked about other sectors such as railroads, et cetera. But when I look at energy, I think you have to have some energy at a minimum for a hedge. But I think it's important to be positioned in the energy sector. So when I look at something like ENP, a company like EOG Resources, great balance sheet. Obviously, the fact that energy's dipped down a bit, I think it's a company that we have in our sights, and if there's
Okay.
continues to be a correction, it's a position that I would add. Very good balance sheet, good cash flow, and it's something that should be in portfolios. As you look over the long term and certainly over the course of this year.